today we are talking about RWAs, real world assets. Now, some notable people over the last year have said that crypto's future lies in bringing real world assets, so like stocks, bonds, equities, on chain. BlackRock CEO Larry Fink said the next generation for markets, the next generation for securities will be the tokenization of securities. And CoinDesk called RWAs the next $1 trillion opportunity. We've heard that before. I hear you. Over the last month, major crypto players like Centrifuge, Coinbase, Circle, and Aave have launched a tokenized asset coalition with a strong focus on education and advocacy. It's all about accelerating adoption of real-world assets on chain, and that's just one example. So why are RWAs so important? One of my favorite quotes about this comes from Kevin Meow, head of credit at Block Tower Capital, who said, "Our modern securities infrastructure is held together by a patchwork of PDFs and Excel spreadsheets, and an absurd network of third parties that don't need or even want to be involved." I think that's fantastic because it really drives home exactly why there's a problem today. Real-world assets could present a more elegant, streamlined solution to this problem. And here to help us understand how, I'd like to welcome two amazing speakers, Asad Khan, DeFi lead for Centrifuge, and Ryan O'Shea, head of ops at Maple Finance, to come here and help us learn a little bit more about real-world assets. Gentlemen, welcome.
Awesome to be here, Caleb. Thanks for having us.
So let's dive right in here. Real-world assets, RWAs. Y'all, they're having a moment right now. They are having a moment. They are all over crypto Twitter. They are all over some of the major publications, and that's super exciting to see. So let's take a step back here, and guys, help me understand, help me define this. Let's go back to the basics for a quick minute here. What is a real world asset? Help me define some of the initial terms. Asad, I'm going to start with you, and let's just kind of take this one after another here. Help us kind of like get back to the basics. Like what are we even talking about here?
Yeah, perfect. For Centrifuge, like the words I like to use are credit on one hand, right? Really what we're doing here is credit instruments. We're taking kind of traditional financial assets and bringing them on chain. And then the other part of it, I think for Centrifuge, we're particularly focused on is private credit. So this is the credit that's being issued by, we like to think of it as SMEs or everyday businesses, not, the government, for example, or a large, maybe massive public agency type of entities. Really, private credit is the type of stuff that keeps kind of economies flowing and their everyday businesses having their needs met. That's what it means to Centrifuge. We kind of support a variety of assets and a variety of investors, but that's kind of the core of the idea for us.
Yeah, absolutely. I think Centrifuge and Maple are probably aligned on what real world asset is, and I definitely don't want to blow up the headline or the naming convention of what this panel is. But I think, for me and, a lot of others, when we think of real world assets, we just think of traditional assets, right? So I think to answer the question is how do you differentiate between what a real world asset is versus a digital asset? I think it's probably a good question to start with. And when we think, as Asad mentioned, traditional assets is essentially just a representation of a traditional asset on chain. So whether that's, bonds, art, you can go down the list, real estate, et cetera, et cetera. But I think, how does that differ from, a native asset that's on the blockchain is probably good to see why they differ. And I think how we think of it on Maple, we probably think of three prongs. One is the collateral. What does that collateral look like? Is that good collateral? Because I think what we're probably going to get to later is why isn't everything on chain? I think if I look at myself, back in 2016, 2017, when I started learning about smart contracts, and if I had sat here back in 2017, I would have sat here today saying, everything is on chain, real estate, art, every single thing. Why wouldn't it be? But I think the reality is where we're sitting today is, it's a lot more complex than that. So bring it back to my earlier point is, what should be on chain today versus what should be on chain in, 5 months, 6 months, 10 years is quite difficult. So for us, it's, that collateral, what does that look like? That duration, is it short durated? Is there demand for it? And then I think the last thing is there attractive yield? Is there going to be that demand coming in place? And I think that the key differentiation that I started this point off with is how do native assets that's in the blockchain differ from real world assets or traditional assets. And I think that's what's sparking the demand at the moment. It's that actual demand in real world assets is because they're uncorrelated to real world, they're uncorrelated to digital assets. So we can see, the crypto cycles that happened at the end of last year, all yield got pulled out of the crypto space, whereas real world assets are tied to traditional assets. So there's a bit of an uncorrelation and uncoupling there.
Yeah,
I think that's bunched up a bunch into the start of it.
Yeah, I think that's exactly, that's exactly where a lot of people are seeing some real differences here, because over, as we've all seen, like the different markets over the last few years, you've seen a lot of volatility. But when it comes to real world assets, like there's something actually tangible there. And I think even for a lot of people, there's almost a mental correlation to say, okay, so if you are taking something that is tangible on chain, you can see it, you can feel it, you can hold it in a lot of cases, and you understand where that value is. And that I think conceptually makes real world assets, and especially from a finance perspective, that makes them much more easier to understand. Would you are you seeing some of that shift in how people are understanding real world assets?
Yeah, I think so. I think like a perfect example, and it moves away from real asset because that's something that's been seen the last year. But like the biggest example of real assets is stable coins, right? They've been around for a number of years. They are backed, in the example of like USDC, they are backed by real US dollars. So I think that's something to get people's head around. They have instant settlement. You don't have to deal with counterparty risk, et cetera, et cetera. Whereas like a US dollar, we all know today, that doesn't settle instantaneously. It doesn't have the transferability, yada, yada, yada. Yeah, 100%.
Yeah, from my perspective, Kaleb, I think it's actually, the story of really blockchain and crypto for so long has been kind of getting caught up in the speculative hype and all this noise and people chasing interesting ideas that are really experimental and them blowing up in various ways, both in price and then maybe function as well over time. And I feel like really what the real world asset trend and like Ryan kind of mentioned this, the name real world asset implies it's supposed to be something different from all this other stuff that's been going on, right? And not to discount that, I think that plays a really important role. But really, what we're seeing now, I think, is people coming back to, okay, I have DeFi, I have blockchains, I have this new way of doing transactions and financial technology. Like, what should I actually be using it for? And then, hey, there's a bunch of opportunities, I think, in the credit space and traditional debt instruments where there's a bunch of room for innovation and using these systems in a better way. To me, that's what kind of captures the real world asset trend. In terms of like investors and markets understanding that, I think it's all a different journey, right? You either come at it from a credit or a finance angle, and then you have to learn the crypto and blockchain side of it, or you come at it from a blockchain and crypto angle, and you have to learn the credit and finance side of it.
Yeah, no, I think that makes a ton of sense. I want to dive into some of the points that both of you started to hedge into, which is getting to some real, like some enterprise use cases. Like, where are you seeing some real momentum? Before we do that, though, I like this question of, what are some of the biggest misconceptions that you've seen right now, or that you've seen? And so I'll start with you, because I'm gonna say I can almost guarantee you've heard the phrase, hey, can I tokenize my car? Like, is that a thing? Can I do that? And like the answer, of course, is always like, yes, but so like talk to me about some of the biggest misconceptions you've seen so far. Maybe that's what you're seeing or not. But Asad, let's start with you.
Yeah, no, it's a fascinating question, right? That quote you mentioned from Kevin Meow earlier on like Packy McCormick's blog. If you actually remember the whole context of that, Packy McCormick had a podcast and someone asked him about, okay, what is this real world asset stuff? And he wasn't able to explain it like well, right? I think the problem we all have is we try to like talk around these things as if they're brand new, but the misconception I like to always remind people is that these are traditional assets. These are mortgage-backed securities. These are debt instruments, commercial paper, right? There's a lot of ways you can bring this stuff to life on a blockchain, and there's a ton of benefits you can get, but you don't have to get real crazy on what the asset is or what the type of instrument is. And so to me, that's the biggest misconception I like to always address, is that we're taking traditional finance and maybe the best parts of traditional finance, and we're applying it in new kind of form and function. And that's what really the innovation is here.
Yeah, 100%. Yeah, I think, that is the biggest misconception, is like, why isn't everything on chain? As I kind of start with, like everyone's just like, let's just get it on chain now. But I think we'll get into this a little bit on the use cases, but like why you're seeing like the pace of things that are happening, or why some people might say it's a slower pace than they would like, is that demand. So like we went from an environment last year where it was like yield maximization, right? Everyone was just looking for yield at all costs. And now we're in a kind of market where people are risk off, right? So they're thinking about what the risks are, what the counterparties are, what the duration is, things of that nature. So if we think of those examples like cars, car loans, mortgages, they have like very long duration, and people aren't interested in that when we're already, just finding our way in the crypto space.
Yeah, I love that. I mean, that's crypto maturing, right? Like that's like everybody, that's the thing that we've all started to look for, those signs that, the yield chasing and the yield farming is a thing, but looking for like, where can we actually find the utility of the blockchain technology that underlies that? Like, that is where we're going to find the real unlock. And it seems like real world assets are at least like starting to provide a window into that, which is, I think, super exciting. Okay, cool. Ryan, I'm gonna kick to you for some of these this question around like, where are you seeing the biggest impacts today? So, looking across, and I think it's important to think about this from a global perspective, where there are hotspots of activity globally. I know for sure both of your organizations are doing some great stuff worldwide. Ryan, where are you seeing some of the most exciting use cases for RWAs today?
Yeah, absolutely. I think, most exciting or most near term is, you can
Sure.
challenge which one is which, right? Because exciting might not always be the thing that is happening right now. But I think the things that are like most impactful are that are real, especially in like the Maple instance, is probably two use cases. One is tokenizing US Treasury bills. I know that kind of sounds like it's US centric, but what that does is that actually opens up access to that globally. So if you think of, we're specifically talking about, Web3 companies or, Web2 companies who have access to Web3 or have large stablecoins in their balance sheet, they mightn't actually have access to treasury bills. I know as Maple Finance, having a banking partner is quite tough when you're a crypto business. So if you're a startup, a Web3 business, a DAO, an institution, whatever it is, the accredited investor, and you see the risk-free rate now is at 5%, and you're a crypto business, you look at lending protocols, we're in the low single digits. So something like tokenizing US Treasury bills and democratizing that and giving access to that is something that we see as like a real big use case at the moment, that is actually giving people access to that yield, because otherwise you have stable coins burning a hole in your balance sheet. I think the other big use case that we're seeing, and this kind of ties into what I was talking about earlier about duration and collateral, things that are a shorter duration, is the concept of trade receivable financing. So we have a tax receivable pool on Maple, whereas tax credits provided by the US Treasury. But that's just like one example. But you can think of, factoring trade receivable financing for businesses who can't get access to like private credit, or it is cumbersome. So you're democratizing that at like a global level, but providing all the benefits that we have of on-chain, visibility, transferability, et cetera, et cetera. So I think they're like two immediate. They mightn't be the most exciting, but they're like tangible, making business impact, giving access to yield, and then also on the factoring side, giving businesses opportunity to actual capital that they mightn't have had access to before.
100%. It's kind of the promise of DeFi. It's kind of the promise of what we're doing here: more equitable access to these financial tools and instruments. But the trade financing thing is super interesting. Are you seeing that picking up in a specific industry? Like, where are you seeing a lot of that activity right now?
Yeah, so the first use case that we have is more tax receivables, right? But I think the interest now, we have 3 or 4 different ones that we're working with in the pipeline. But it could be with fintechs. It's more kind of, I would say, growth stage companies, where that access to capital, private credit, is kind of challenging, and where we can be competitive on rates and things of that nature. So I would say it's that Series A, Series B type companies, fintechs that we typically see that are looking for that. Because going back to my earlier point, it needs to be good collateral, right? We're not just going to open it up to a seed or pre-seed business, and then the collateral, the duration, and the benefits don't matter if it's actually not good collateral, or if it's no collateral in any case.
Yep, super interesting. Asad, what about you? What are you excited about right now?
I'll try to add on to what Ryan said, because I think he covered kind of like two of the most interesting areas that are immediate in front of us, right? Like the receivables concept, and then like U.S. Treasury assets or like liquid credits coming on chain as well. But I'd kind of maybe group things in like three kind of like the trends that I'm seeing, right? I think the first is that we are proving, like Maple and Centrifuge, these new kind of fintech lenders, these new fintech lending platforms, are proving that you can actually get to market faster, right? If you think of, Centrifuge really focuses on heavily on securitizations and how do you bring a securitization on chain. If you think of what it takes to do a securitization in the kind of the real world, right, the traditional world using Web 2 stack, yeah, you got to pay a ton of intermediaries. You got to do a bunch of Excel. It's like months, months of work to even just stand it up and get it rolling, right? Either from an issuer's perspective or like kind of the executing broker. I think you move this world to an on-chain format, you can go so much faster. And look, we've got real life evidence. People like Maple and Centrifuge. We've got academic evidence that's coming out. The BIS did a paper on this, ABS transactions in China and how that's saving money. I think this type of stuff is starting to see where we're gonna, more businesses are gonna be able to take advantage of this as more intermediaries come on chain and realize the opportunity here to be able to move their operations on chain. I think the second thing is like access to new markets, right? Ryan kind of mentioned it as well. You can provide access to people who didn't traditionally have access to these rails. I think that also means that you have kind of a new class of investors and borrowers on both sides of it that can get access to these opportunities, right? You're not constrained by your ability to have relationships with the largest, kind of broker dealers in the world in order to get access to credit opportunities. It's now becoming more available through platforms like ours. And then finally, I think this last one is like, it's really relevant right now. It's also probably the most difficult to take advantage of or get your head around. It's kind of new liquidity, right? It goes into new access to new markets, but really what I'm talking about is there is a world where there are users that have stable coins or other sort of like crypto integrated business chains or business models, and they are kind of primary investors for this on-chain credit because they have the most need for it, the most significant need for it. That's a really interesting opportunity that kind of grew out of like the DeFi bull run, the crypto bull run of the last business cycle. But I think it's something that'll be here forever. And if you think about like digital ecosystems and like the metaverse and that type of thing, I think that type of liquidity will always be something that starts to find its way into this side of the world. And that's a really exciting trend that's happening today in smaller ways, and I think will continue happening over time as well.
I think that is super interesting. Where is Centrifuge supporting that? Like, we're gonna get to some fun things that I know you've got a big conference coming up, but from your side, like where are you starting to like focus some of your energies at Centrifuge to kind of grow that? Because I think that is a piece that I haven't heard a ton about, but it's clearly on your radar, and I'm sure Maple is also doing the same. But from your side, how are you framing that up?
Yeah, I'll talk about a product that we launched recently called Centrifuge Prime. I wasn't actually expecting to talk about it in this panel because typically this is like a very, to be candid, right? It's a very DeFi oriented, very crypto native kind of product focus. And what it's doing is it's going out to DeFi native organizations, whether it's DAOs, whether it's protocols, whether it's stable coins like Ryan mentioned, and it's offering kind of a specific product in a way for them to access real world asset yields. Like what that product is doing is it's helping create legal infrastructure, it's helping create technical infrastructure, and then maybe most importantly, it's helping to bring kind of the ecosystem of partners needed to really onboard and scale investment portfolios. These aren't things that DAOs typically do very well on their own, right? Especially if you think about traditional credits. So that's kind of a focus that Centrifuge has in enabling that liquidity. And again, right, this is something that if I look at and I talk to somebody who's firmly in the Web 2 world and they're working in an environment where they don't interact with crypto or blockchain rails, it probably sounds like a crazy world to them. But I think that's a world that's like around the corner and it's very much very real today. And it's going to be something that continues to grow. And like, if we talk about the intersection between Web 2 and Web 3, it's going to be kind of bridging the gap between these liquidity markets, in my opinion.
Yeah, I think that makes a ton of sense. Ryan, anything you wanted to add on that?
No, I don't think much. I think the only, on Asad's last point about like bridging that gap, I think that's the thing that we need to do. Moving away from this like DeFi and like just focusing on the technology. Like if we can bring traditional players into the space and just focus on what the technology is, the benefits, and like abstract away all the cryptoness of it. I know the bits that some of us love, but those user experiences, those on and off ramping, those things are things that are key to us at Maple. It's like how do we abstract them away? So initially it's like, how do we get on-chain capital, within one of our platforms, Centrifuge or Maple? I think the next thing is like, okay, how do we focus about that off-chain capital? And even calling it off-chain capital, we probably shouldn't call it that. It should just be like, how do we just help businesses? And I think that's a key focus item for us as we start to build and mature as an organization.
It reminds me of the old joke, like, what do you call Chinese food in China? It's just food, right? Like you don't have to call it that thing for it to be true. Okay, I think you really took us to a really nice place here, which is, a forward looking. We're all looking forward to a future where something like what we've been talking about here, this next generation of real world asset adoption, in the future, call it 5 to 10 years, like what does that future look like? So, say we're able to, accomplish all the great things that we're hoping to, and we get people to stop saying real world assets and just like understanding that it's just like on-chain credit. What does that future look like? What are the big things that people can look forward to if we all accomplish this thing that we're trying to do? And Ryan, maybe I'll start with you here on this one.
Yeah, no, definitely. And I think we would all love that future, right? I think,
Exactly. I can't wait till we stop using the word real asset, right?
Yeah.
I think it would just like remove all of these intermediaries, all of these
Yeah.
the counterparty risks that we see, and we would just have a beautiful homogenous like ecosystem, right? Everything would be on chain, everything would be verifiable. We can tokenize whatever we want, we can fractionalize it. And there's open capital to everyone. And I think, that sounds like a far-fetched and I'm like thinking this crazy world. But like, why are we using a system like an archaic, like the financial system? Why are we using that for over like hundreds of years, right? Like it's just not working for anybody. And we're creating like these jobs that are like, people are just doing, mundane back office work in banks and things that we can have people doing higher value items and just automate that way and giving people better, benefits in their life. So I think, that sounds very like beautiful like picture, but I think that's where we're heading. That's where we should be going. I don't think it's something that we'd be shying away from, and just because the big banks are there doesn't really reason why they can't adopt it or start using it and using the technology in-house, right? It's not to say, we're these crypto people of like take down the banks. I think both, I don't want to speak for Asad, but I think as Maple, we would definitely love to work with banks and, use our smart contracts and use that infrastructure rather than, pull all down the system and the man. So I think that's something that I would look forward to in a world like that.
Love that.
Yeah, I mean, look, as much as I love to make fun of the banks and remind them that they're really bad at technology, I would love to work with them as well, right? I think banks serve a pretty important function, all things considered, and we haven't been able to recreate that yet fully in like the crypto world. So it's pretty institution, right? I think what's interesting about like imagining the world in the future and like how we get there, and like Ryan's really kind of talking about a lot of it, like it really is a world that to me looks more like DeFi than we realize. And I don't mean the crazy stuff in DeFi, like people's profile pictures and like cats and dog coins being worth like billions of dollars. I really mean like what Ryan was saying, automated systems that kind of transact and perform calculations and functions for you, right? And I think that does sound crazy when I say that, that's kind of the world we're going to, where your portfolio is figured out by a computer that's run in the cloud somewhere. But like, I don't think that's that crazy in reality. But what it really means, though, and I think where I spend a lot of my time is education on kind of both sides of the market. Like I said earlier, right? You either have blockchain people or tech people that know a lot about the tech and they know nothing about traditional credit, or you have credit people that know nothing about the tech. And to bridge that gap takes kind of this new era of operators, right? Like think about your financial accountants that spend all their time understanding accounting rules and then how to implement them in systems in traditional finance. We need kind of that era of accountants that can then implement that stuff on blockchain technology, right? And part of that is just understanding how the blockchain works, understanding how to create new operating systems around that and processes and like people kind of in the meat space. Another part of it is actually going to be where we create new software that can interact and kind of help us and like from like an accounting. Like I think of Bitwave, the things that Bitwave is doing is a really big part of like bridging that gap, right? So the operational side to me is like where maybe the challenges, but also the opportunity for people, especially today. That's like really an educational challenge as much as it is a technical or a skills-based challenge or an awareness challenge, right? It's about learning how things are happening and then getting up to speed yourself as a team and implementing new processes, right? That's the way I think about it.
Thank you for the Bitwave plug. That was unpaid and unrequested, so thank you for that little organic element there. Asad, you left us with a nice little morsel there, so I'm going to go back to you on this just in our last few minutes here. What is one piece of advice that you would have? And I'm gonna say specifically, we have a lot of financial leaders on the call today. We do a lot of our education around enabling the finance ecosystem. So as you look at enterprises that are starting to adopt real world assets. What's one piece of advice that you would have for specifically the financial teams that are starting to wrap their minds around, how to move forward with this, with RWAs on their books?
I mean, look, the first thing that comes to my mind is that if you're if you're a player in the space at all, right, whether small or large, and you don't have some part of your business oriented to learning and keeping up with the advances that are happening in the space, you're like already behind, right? And it was okay maybe 3 years ago to like not pay attention, but right now you have to start keeping up. And there's a lot of sentiment out there and a lot of narrative, and I think that comes with bear market cycles and down markets, but you have to ignore that and realize that this is really where the future of finance is going, right? And you don't have to get there tomorrow, but you have to start building the ability to do that. And then I think the second part is, if you're not finding opportunities where your business can have do something, right? I just think you're not looking hard enough. The space, even in a down cycle, this is like one of the reasons I'm so bullish here, is that even with all the negative sentiment, with how much is left and how much is exited and how much has crashed and burned, there's still so much going on. And I think that's just a product of how much opportunity there is.
So you're saying if people are already on this call today, they are already ahead of the game. That's what I'm hearing.
That is it. You are the ones that are ahead.
Ryan, over to you. What's one piece of advice you have for financial teams that are looking to adopt, or that are wrapping their heads around potentially bringing on real world assets?
Yeah, definitely. I definitely don't want to take the opposite side of the coin to Asad. I definitely believe, all bullish on it, let's do it. I would be more, given my big four kind of accounting background, would be more on the cautious side, right? Do your diligence. Not all RWAs are the same. Like, who are the counterparties? What is happening on chain versus off chain? The on chain things we can obviously track. What is happening off chain with this collateral? Who's custodying it? Things of that nature. And then look, another shout out to Bitwave, right? Like, perfect accounting treatment. How is it working? If you invest in RWA, you get that LP token back, typically that represents a portion of your investment in the pool. Work with providers like Bitwave to account for that correctly. What does that look like? So I think that's what I do people with.
I love that. Gentlemen, last little thing here. I've already gotten my 5-minute warning. So final question to you both. What's next for you both here? What's next for Maple? What's next for Centrifuge? Maple, I know you just closed a nice strategic round, so congratulations on that. Ryan, I'll start with you here in just a moment. Asad, I know you guys just have a massive event that's coming up in I think it's next week. So what's next for Centrifuge? If you want to just give a quick little 30 seconds each. Ryan, let's start with you. What's next, man?
Yeah, absolutely. So I appreciate the shout out on the round. Focus for us is actually expansion into Asia. So both of our co-founders are currently spending the month over there. So we have some interesting partnerships coming down the pipe, really trying to expand that. And then beyond that, we probably, spent the guts of this year in building mode like a lot of others. So we recently 2 to 3 key products back in the market that, I mentioned a couple of them earlier. I don't want to completely shield them, but just focusing on getting them in users' hands, right? So it's like expansion, working with a lot of key partnerships that are coming out, and then just getting those products in users' hands, I would say is the main things that Maple are focusing on.
Awesome. It's massive. Asad, over to you.
Yeah, I mean, you said the RWA Summit. It's all on my mind these days. Mainnet next week, we launched the RWA Summit. Really, we felt that RWAs was like the best intersection between the world of DeFi and TradFi. And so we want to keep using that and kind of to build and bridge the gap. So that's a big part of what we're doing, which is getting people in the room to just talk about the stuff more kind of properly, right? And not get distracted by the noise and really dig into what's happening in the right way. And then I think for us, a big focus is kind of leveling up the quality of infrastructure and the quality of assets you see on the platform. So that means, improvements on the legal structure and setup. We made a ton of bounds there, improvements on the way the pools operate technically, and then improvements of the partners we're able to bring to the table. We launched a pool last year with Block Tower Credit, which I thought was like, a pretty big signal for what we're going to do in the future. And that's like bringing institutional operators on chain, right? So I think we're going to try to do more of that, bring just more interesting parties that are like really kind of, improving the way that they operate in finance. And that means moving to a blockchain and hopefully doing it with Centrifuge.
Awesome. Big things in store for you both. Guys, this has been a ton of fun for me. I hope you enjoyed it. Thank you both for joining this panel. Really, really do appreciate it. And of course, we'll circulate some information on how to get in touch with both of you after this to everybody on the panel. Thank you, panelists. And thank you for attendees for hanging out for this 30 minutes. Really appreciate it, guys.
Awesome. Thanks all.
Super fun. Thanks, Ryan. Thanks, Kaleb.